Tonight, I'm your host, Ryan Polakaitis, and I'm here with Mario Camino and Dan Rivera of Arkad Group. Dan and Mario are residential real estate expansion developers and also commercial real estate developers with a focus on Plainfield. Thanks for having on the show, guys.
Hey, man.
Thank you.
How are you?
All right, so before we jump right in, why don't you guys tell us a little bit of how you got started in real estate investing?
How did we get started? It was a long time ago. Pre-crash, so we came from two different worlds. We met in the brokerage world, but we on my end, my story is it's pretty straightforward. I mean, went to college, had big aspirations to do something outside of real estate, discovered real estate in the process, flipped a house, that led me on to a couple others, that led me on to wanting to get my real estate license, and eventually met this guy who was a broker at the brokerage which I joined, and in fact he was the top broker at the brokerage that I joined, and I came in. We got to but they our desks were actually right next to each other, so we got to work together, and competition at first, I'd say.
Started off as friendly competition, definitely. I started off, the corporate world, gave that up, didn't want 9 to 5 anymore, got my license, wound up meeting this guy. Like you said, our desks were next to each other. We started competing. Then the crash started happening. We started seeing the signs on the wall, and we made a switch up, and we started working together, doing mostly short sales. And we were basically the first realtors in our area to even tackle the idea of short sales. Before anyone even knew what a short sale was, we were doing them as realtors for other people. And it kind of started from there. And a light bulb goes off in your head and go, hey, we're making a lot of people money, and we're helping people, with their homes, sell them in this time of need, and hey, there's opportunity out there. So we started jumping in.
How about take a part of that pie?
Yeah.
Come in, Chief. Sorry, guys. This is our summer intern. Chief, say hi, Chief. Anyways, make yourself comfortable, man. We're here for a minute. At any rate, so yeah, that pretty much sums it up. We met. We started working together. There was a nice flow, great synergy. That became a friendship, and that eventually became a company. That became a commitment. That became an idea that turned into something bigger than both of us. And Arkad was born. Before Arkad, we started with a small little company, New Jersey Home Remedy, did a bunch of flips, did very well, and quickly realized that real estate is one of those businesses that really turns to be whatever you want it to be. You take it as far and as great as you want to take it. So we did. We knew right away that times were going to change, and short selling wasn't necessarily going to be something that would sustain itself for years and years. Eventually, inventory will clear up, and rehab
changing. Right. A lot of things were changing, and we realized way ahead of the curve, which we pride ourselves on. By the way, we kind of like to see the future and go for it, and be they call us the Marines of real estate. Honestly, we tackle shorts first. Yeah, that Goodson coined
nice.
That. And we started rehabbing way before. Honestly, when people thought we were crazy for doing it.
Right.
Why are you doing that when you could just flip a short? Well, here's why. You'll see in a year or two. And that's basically what happened. By the time everybody caught up and started rehabbing houses, and everybody was a rehabber, we were doing additions. We were adding square footage to houses and adding levels to houses, which is what we mainly focus on the residential end anyway right now.
Right.
There's something to be said about the concept of getting there first, huh?
Sure.
So being able to get there first, in a sense, allowed us to establish ourselves better, create a team, perform, create systems, make sure that things work very well for when the market is ready to turn again and to bring profits again. So we started with simple basic rehabs. I'm talking average purchase around $200,000, maybe 50, 60,000 in renovations, resale for 350. So I guess in New Jersey, relatively smaller houses in B, C plus towns, it worked very well. We proved our concept was right, and we rode that wave. Like I said, more importantly, we were able to build a team, a very resourceful team, which now it has turned into our own construction company. But back then, it was just a bunch of guys who hardly had any work, and we're looking for a place to I guess start up again after work dried
We
up.
were one of the few hiring any construction
Right.
people. There was a lot of unemployed construction guys back then.
Right. Well, you bring up a couple great points there. The first being the love for real estate, where it's something that I appreciate is that there's really no ceiling. It's as far as you want to go. I recall when I worked at corporate world, you can, you can work weekends. I'd work 2, 3 weekends in a row, no days off, no nothing, and maybe you got a pat on the back. You didn't get, there was no raises or bonuses really. But if you're running your own real estate company and you're putting that extra time, you're going to see the full benefit out of that, which is great. And then the other point you made as far as staying ahead of the curve, I noticed that especially with short sales. I remember one of my original partners was making an absolute killing, and I felt when I got into short sale flipping that I was always chasing, as soon as I was ready to land my first deal, there was some regulation about you can't flip it after this much time. And before you know it, those profit margins got smaller and smaller and smaller until where they don't even want you to flip them unless you're holding them 60, 90, 120 days. But so getting in ahead of the curve is a very important thing. So we're going to dive in today a little bit talking about commercial real estate development. Obviously, your focus on Plainfield. For our new listeners, obviously, when they think of residential, they're probably thinking, just a single-family house. And when they think of commercial, they're probably thinking of maybe a shop, right, a mall, or maybe apartment buildings. Why don't you tell us, because obviously commercial is a broad area, what your focus is in the commercial aspect,
I think before we get into the focus, I guess let me lay out the history behind the why we're doing what we're doing and eventually how we went about it. So, the fact that we got into rehabbing at a time where there wasn't a lot of it, like I said, it gave us a tremendous foundation for what we're doing now. It also enabled for other things, and one of them was private equity. Capital markets were freaking out. They were pulling out of everywhere, and a lot of people needed a place to put their money. I just so happened to have a product at that point that was very, very good for the purposes of putting your money elsewhere outside of the stock market. So that created a pipeline of lenders, a pipeline of investors, but more importantly, it created capital, working capital. So the decision making came to a point where, yes, we went through tens and 20-something rehabs, and we knew the infrastructure we had could sustain more than what we were doing. We knew that we could take this further, and now we had established team and lenders. So we did. So the step further was additions. We started focusing on purchasing single-level structures for the most part, and A+, B+ towns, Westfields, Cranfords, Berkeley Heights, Summits, Metuchens. We believe that since everybody's getting back into rehab and the markets will get a little tighter, and why not establish ourselves on a new avenue that will take the competition in essence a couple of years to even catch up to. So we did. We went after additions. We started creating systems that specifically targeted properties that we could add square footage to, and that led, and plus with all the capital resources we had, all of a sudden we packaged these beautiful single-family projects, rehabs in a sense, on the first level with a brand new structure on the second and third levels. And since they were in better than average towns, our numbers made great sense.
They sold for more.
Right.
They sold faster. The buyers were stronger. I mean, everything kind of lined up perfectly with those, and it just made a ton of sense.
So because of the fact that we had to learn, in essence, how to add, basically double the size of a house, add an entire new house to an already existing house, we had a huge learning curve on how the entire process works. How do you turn something that is not into something that it will be? And that entails a lot of details, but we took all that knowledge and started applying it, or well, at that point we were hoping that we could apply it to commercial real estate. In essence, we started looking for cities, towns, first of all, that weren't saturated. Saturation creates inflation. It's never good for business. So we were looking literally for a place that was not necessarily a hot Jersey City market or a hot Hoboken market. In fact, the opposite. We were looking for a place that was sort of forgotten, a place that was there, but no one really cared to look, or no one really cared for. Usually, that entails demographics, bad reputation, stigmas with towns, and so on and so forth. So during this research, this goes back to, this is a long time ago. This goes back to around 2008.
Yeah, when we first, almost in the middle, when we halfway through our game. Yeah.
2008, 2009, we knew that real estate was a business that we could take for years into very, very far and big places. And the underlying the common denominator was that all roads really led to commercial property. I mean, look, you can live a very good life flipping houses, very good life, but you're not really building much wealth. You're not necessarily building something that 25 years from now, when it's paid off, it's worth $5 million and your cash flows are $250,000 a year.
Yeah. Flips are great, but as they say, you're always kind of chasing your next check.
Right.
Sure. Same thing with wholesaling.
That next flip, same as wholesaling.
Sure.
You're done. Your last one, your big deal, done. That was passed. You're not going to get anything more from it. You're never going to see it again. It's done.
So you're saying that the transition is, I guess, the mindset that made you look to commercial real estate was mostly because, okay, the passive income and the building wealth, that was the most attractive piece, which made you say, okay, we have a great system in place, but we're looking for something, for that next step, something that's going to provide us that next big jump into a world of opportunity, really.
Right. It requires a little soul search, and I'm not saying everyone should start investing in commercial real estate after you flip so many houses. That's definitely not what I'm saying. That this line of business is certainly not for everyone. What I believe that pushed us to the next level is truly just a commitment to ourselves. I mean, it's looking deep inside and saying, well, are we built to handle that type of pressure? And if we are, how far can we take it? Turns out that we were, and it turns out that we're taking this very damn far. So where you are in life and where you like to be in life, I think in the future are probably the biggest factors in this. I've been in real estate since I was 19 years old. I never had a 401k or an IRA, or my boss never matched my savings or whatever all that stuff. So I grew accustomed to building wealth the way I know. And when you start looking at all the different angles that could help you build that wealth in real estate, you realize that commercial real estate is certainly the best one. And so we made a commitment. We found our land. We found our city. Or what we at that point believed was a gold mine, and now we've sort of
our big gamble
proven it. Our big gamble.
Well, that was my next question. It's what do you guys look for in a particular market or area when deciding, okay, this is going to make sense for commercial real estate? I know you alluded to that a little bit before, saying, hey, I wanted to look for not the next Jersey City, but something that was forgotten, something that was that could be built. So and now, Dan, you just mentioned the big gamble. So let me ask you. Is this just a kind of an emotional thing where you see,
never
emotional.
Right. Well, when you said, you said that in a town that was forgotten, and I know you guys are very passionate about Plainfield. So I'm trying to see why Plainfield. Why? What was the big draw?
So there's look, there's multiple answers to that, but the bottom line is that there aren't many cities in New Jersey, and this goes in the entire state, that have some of the benefits that we found in Plainfield specifically. Population is always important. The more people you have living in any given city, the more rentals you're always going to have in any given city. The infrastructure of the town. This is just like Patterson, just like Passaic, just like Jersey City. This is a very old industrial city. This was back in the early 1900s. There was a lot of warehouses, a lot of office buildings, a lot of commerce in town, which as times change, what's left behind is old shells. And I think one of the third most important factor, I guess, in finding that location is we're moving into a world in which transportation will become more and more important. Lack thereof and the benefits of will be huge. They already are, but will become bigger and bigger factors when someone's purchasing a property, or as the rental market grows, when most people
Where you're going to
rent
wind
an
up
apartment.
living, right?
So Plainfield happens to have 2 train stations. That's not something that most cities have, and it's something that's certainly undervalued here in this city. What does that mean? It means that from Plainfield, about 2,000 to 3,000 people can go into New York City on a daily basis. How does that translate into dollars? Well, it turns it into a very, very appealing commuter town. And that's sort of the model that we're using. So, in essence, we look for what's known as TOD, transit-oriented development. It's a new standard that a lot of cities in search for that spark to redevelop their downtowns. And downtowns are usually the hearts of any given city, so downtowns are always sort of the priority in any given town.
The business districts,
Yeah.
where the trains are located, things of that nature.
The idea is if commerce happens in any given downtown, more people will be willing to live in that town.
Now, just to give an idea of certain towns that adopted this TOD standard, I think we should just spit off a quick list. New Brunswick,
Montclair, Jersey City. I mean, name them. They all have it. Somerville just did it. I mean, Somerville is going through this beautiful
a
renaissance.
nice boom, and that they're a perfect example because they're kind of new to TOD, and it's working for them big time.
So what's
tons of development?
What's TOD? TOD is, like I said, is an acronym for transit-oriented development. What does this mean? It basically means that a town is in essence rezoning itself. It's rezoning its key parts, its downtown areas, in the sense that what was allowed to happen in that particular zone is no longer the case. It's better. It's easier for people like us to come in, be able to purchase something, and turn it into what they are looking for. Big piece of this. I mean, this isn't us saying we're coming into town and we're going to do this. This is us saying we're coming into town and we're going to work with the city hand in hand to turn this particular area into what we all believe this could be. So
Right.
The political aspect of what we do is tremendously important. If I could, I mean, it goes hand in hand with being able to purchase a building. It goes hand in hand with being able to fix a building and ultimately rent it out. So it's a very, very important factor in this. Needless to say, we've made those connections. So those were some of the first connections we actually made when we decided to start tackling Plainfield. So that led us to get a little bit of an insight, I guess, on what was happening here. And this is back in 2011. And in 2011, Plainfield was already working on setting up this new standard. So this new TOD standard literally was instilled at the end of 2012, less than 3 years ago. Since then, there has been a tremendous boom. I mean, again, we just so happened to realize this a little bit earlier. We so happened to get in town a little bit earlier, made the right connections. New mayor coming in, old mayor going out, bunch of new positions, including economic development in town, was coming in, and we were able to plug ourselves in before a whole lot of other developers came in. What does this mean? This means we have an easier ride. We are able to get things done a little bit easier than most. From there till now, I mean, this happened about 2.5 years ago. As soon as the new standard was instilled, we moved forward and purchasing our first building. That was about 2.5 years ago, and it's actually the building that we're in right now. We decided to keep the second, about 20% of the building for ourselves. in essence, we rented out the whole thing and just been moving from unit to unit to unit until we probably end up leaving.
Pushing ourselves around as the tenants come.
Yeah.
If we get another one, we're homeless. But I don't think that'll. Rental income is
So Mary, let me ask you this: when the TOD standard, you're saying that there's certain towns that adopt this new standard for what purposes? To project the growth and where the city. Okay.
So they can revitalize. So they can give us developers the tools that we need in order to come into a town where you would normally not be able to do something. So, for instance, we can talk about this building. This building is it's a 17,000 square foot, a 4-story office building. It's in the heart of downtown Plainfield. It's worth about $2.5 million. We renovated this entire thing. I mean, when we bought it, this was just a disaster and a half. Gutted everything, redid everything. Now it's fully performing, fully rented. This building has, based on the new standards, this building requires very little parking, which in a developer's world, parking is one of the single most difficult things to get through when you're proposing a project in a town. In essence, there's rules and laws, zoning requirements that push for normally a 2-bedroom apartment or a 1-bedroom apartment. It's a per bedroom match. So for 2 bedrooms, you need 2 parking spots. What the TOD says is for 2 bedrooms, you need 1 parking spot. So it doesn't sound like a whole lot, but it makes a huge difference when you have 30, 40 parking spots or 30, 40 units.
Now, keep in mind, Plainfield is a very dense area. So, like you said, there's existing buildings, existing shells. It's not like there's a ton of parking downtown. Right. It's a little city.
Sure.
It's a little city that we're hoping will become a big one.
Right.
So before the new rezoning happened, a lot of these buildings, even if somebody was interested in it, you couldn't do much with it because of the parking. You look at it, it's stagnant. I can't go higher. I can't do this because I just don't have the parking to do it.
Right.
So what happens? The properties sit there. They rot for years. The new standards kind of open that up, make it a little more appetizing for developers to come in, for investors to come in, for money to come into the city and generate basically tax revenue for the city and activity for the city.
And Mary, you mentioned earlier, you said that, you make connections with the mayor and it makes it for an easier ride. And you're really referring to dealing with the town so that certain zoning approvals or whatever go through a little easier. I mean, I personally have been in front of the planning board on 2 different towns. It's something you really don't want to do when you have to apply for these variances and whatever else it may be. So you're saying it's very important when you have the town that's working with you and they see that you're coming in to improve the town and the impact it's going to have. That's huge. I mean, and I'm sure you found that you coming in, that it has probably been an easier ride for whatever approvals you need because they see what you're doing and the impact that you are having on the city.
Well, let me just clarify easier ride. It's easier because of the changes in zoning. It's easier because, again, the city does want to see these things happen. But it doesn't mean that you don't have to follow the rules.
Of course.
Rules. They want to make sure you're doing the right thing. You got to get your permits. You got to pass all your inspections. You got to do everything. But as the town is implementing these standards, they're also trying to streamline themselves over at City Hall. So, for instance, engineering is now talking, even from now, this is 2.5 years later, like you said, the engineering, speaking with the building department, when we first started, honestly, it was a mess, but we can go and talk to them and say, hey, these are the issues. We're having a problem. We're here with engineering. It's not going to building. There's a miscommunication happening. What? Within 2-3 months, it was getting resolved. These are things that wouldn't happen in another town. They just, we'll wait in line, buddy. We'll get to you when we're ready.
Right, exactly.
And you just sit tight. That hasn't been the case. I got to say, really kudos to the town of Plainfield and the city and the politician for putting it together and getting it together. It's still a work in progress, but man, they've come a long way very quickly.
Sure.
Our inspections they're happening on time, which is a big plus. We're passing them, which they like. You don't pass them, all of a sudden you're on the bad list. We're on the good list. We're on the dean's list, and that helps.
That's great. That's excellent info. So why don't you guys tell me a little bit about your team itself and like each member and their roles and responsibilities? I know you had an intern at the beginning of the show. Why don't you just tell us a little about your team? You know, the members, what each person really does and responsible for.
Sure. I mean, look, it's we're a big monster with a little family and a big heart. So we do have multiple arms. I mean, Dan and I are the captains of the ship. The way we divide up our work, our tasks are really Dan is hands-on on working with basically our project managers. We have multiple project managers for obviously multiple projects we have, and we have a pipeline of 9 projects right now, 3 of which are commercial repositioning type of deals. We're turning basically office buildings into apartment mixed-use buildings. So it's quite a bit of work. So we have individual project managers managing our residential projects, which are the additions. We have another team managing our commercial properties. Well, they all answer to Dan. They all check in with Dan. There's daily verifications done on just about everything. Now, like I said before, we also own our own construction company. So there is a whole other team that runs that portion of our business. That's on who's, I guess, out there. In here, in the office, and not to mention, I mean, altogether as far as workers, we have at any given point, somewhere in the ballpark between 10 to 15 guys. All spread it through the different projects. We have a driver. We have a purchase order coordinator, somebody that's just making sure that every piece of material we buy is verified and we're not overbuying or overpaying or so on.
And that it's there on the site on time, so that the guys can get to work and not standing around drinking coffee.
So that's on that end. Here inside the building, I handle a lot of the private equity end of what we do. I handle a lot of the capital raising, the deal structuring. I've been called a deal junkie as well. So I look for deals. I'm always looking for opportunity. I've the gift of I guess seeing things that most won't. And so I handle a big portion of that. There is take it all the way to resale. There's also Andrew. Andrew is not here. Andrew actually took off for the weekend. He needed a little vacation.
Deservedly so.
Yeah, he's been doing a whole lot. So Andrew he's a super important piece of what we do. Andrew's our unofficial CFO, if you may. Andrew handles a lot of our financials, a lot of our books. He's an accountant by trade. That's what he used to do.
But he loves real estate.
Yeah.
That's why he's with us.
So he handles that portion of it. That's a small portion on a weekly basis. What he truly loves doing is he loves design. He loves, I guess, just like me. He's a little more. He's a little better on actually putting it on paper and drawing it out. Yeah. He loves designing floor plans. He likes to take the crappiest little ranch in the best town he could find and drawing out a beautiful colonial. and we pass that on to our architect usually. Our architect puts it on paper, and we have a couple meetings on it, and next thing you know, we're turning this little house into, give you an example, just bought something in Summit, $400,000 purchase, about $250,000 or so for the addition portion and the rehab portion of the house. So all in, somewhere around 6.5, 700, let's say, with overages. The house is going back on the market at $1.1 million, hopefully by April 2016. So they're meaty deals. They're good deals. They're very profitable. They require a lot of attention, and they do require a lot of due diligence on the front end. Luckily for us, these are all systems that we've put in place. Andrew has a lot to do with making sure that whatever it is that we want to build on whatever house we're buying actually fits zoning requirements. It's actually something that we can put on it, which without getting too much into it, it works just like in commercial real estate. There's set rules and regulations you have to obey by, and you have to stick to. If not, you'll never be able to build it.
Right.
So he handles that. We have Jessica, who's my beloved better half. She handles a lot of the brokerage work. She's the office manager here, so she handles a lot of the payouts and a lot of the money revolving who's getting paid. Needless to say, when you have 15 workers plus project managers plus regular office employees on any given week,
Subs.
it's
It's a lot to manage. Sure.
there's a lot of money. The money flow is a job in itself. Or verifying that the money flows correctly, I guess is the way to put it. Is a job in itself. So that's Jess.
She works hand in hand with Andrew on that as well. So they're pretty tight.
Then there's Veronica. Veronica is our secretary. She handles all the clerical work for the office. She's here basically every day.
She's basically our in-office hub.
Yeah, she's our backbone, man.
There's times when we're all out of the office because we all have to be on the field for some reason, and she's here making sure that everything's kind of staying tight.
Mm-hmm. And our main project manager's name is Alex. He's the boss
of the bosses.
When he's out there, he makes sure that all the individual project managers are doing their job. So yes, there is a boss to the bosses. There is a manager to the manager, and it flows well. It's multiple checkpoints work very well in this industry. So yeah, that's pretty much it.
That's quite the team. That's very impressive. So, Mario, you talked a little bit about deal acquisition and stuff. If we're focusing more, I guess, on the commercial side, one of the biggest complaints that I see is that people are saying, especially in New Jersey, is the lack of deals in the commercial area of things. And I mentioned when I was speaking to Aaron that one of the challenges I had when I was marketing towards apartment buildings and whatnot, you're dealing with a totally different animal. You're dealing with a sophisticated seller, and the inventory and the response rate that I got was on the lower side of things. So I guess I'm sure the listeners want to know, like, where's your source of deals? Is this, from other realtors? Is this, I'm sure you probably don't have just one pipeline of deals, but where do you find, where do you find your deals? Where do you see that's...
So look,
every rock imaginable.
Right. This is going to sound a little funny, but just like we decided to do with going all the way back, just like we decided to do with short sales, taking it a step further to basically learn to do rehabs, to learn to do additions, to learn to do commercial. We've always tried to take something that's not there and turn it into something that is. Commercial real estate for me is not what it is for most, and that's why I guess I'm more on the development end than just buying strip malls and renting them and cash flowing them or whatnot. I like value add. I am a strong believer and supporter of value add strategies. To take it a step further, I'm a big performer on utilizing what's already there. I think we are one of the strongest skills we have is being able to save as much as we can and structurally still resupport or have a basic foundation of a structure of a property, house or building, still be strong enough to allow us to do just about anything else above it. So the same model that I discussed with the single family additions has carried on to the commercial real estate investment strategies. We look for already existing shells. We look for buildings that aren't but could be. We look for office buildings that are located within areas that have mixed-use buildings with the plan and the strategy of turning that old office building into a mixed-use building. So where do I find my deals? I find them everywhere that everyone else is looking for them. The only difference is that I just look at them differently than most.
Right.
So I don't think there is any special source that I haven't even do. Well, I'm very plugged in with a bunch of wholesalers. I'm very well plugged in with commercial brokers. I'm very well plugged in with residential brokers. So I do have all kinds of sources for all kinds of deals. I mean, and given the fact that I'm here in town and we've created such a big buzz and we performed upon it, there's a whole lot of local building owners that are calling us to sell us their buildings.
We do the direct marketing campaigns as well, and I think this actually goes way back to the beginning, going all the way back to short sales. We always kind of looked at ourselves as, you can go out there and look for deals, but why not also make yourself a beacon for deals?
Absolutely.
Have people call you. You don't call you can call them, but why not have them call you? So we do the direct marketing. We are in the media every now and then. We're talking to you. I mean, there's a reason for everything, right?
Yeah,
sure.
People know who we are, for better or for worse. And when an opportunity comes around, usually people go, well, there's these guys, and I got an opportunity. It's in Plainfield. Well, who am I going to call? You're going to call
Right.
Arkad.
yeah.
9 times out of 10, you're going to think of our name, and you're going to call us, and that's a big part of it. It's a big part of it.
When we first started doing what we're doing here in Plainfield, we decided to reach out to the media, and it worked out very well for us. We were featured on the front page of the Star Ledger. We were featured on the front page of the Courier News. All kinds of, from
Blogs.
all over the internet. The phone didn't stop ringing for like a whole week. It was one of those things. But the residual of that is local presence. All of a sudden, people know that there's this group that is in downtown Plainfield buying up everything and trying to revitalize the whole town. That added to an online campaign we created called QueenCityRevival.com. It sort of just put the whole thing together very nicely for us. So going back to the question, man, Dan's right. I think the real strategy is positioning ourselves so deals come to us. And once the deals come, it's being able to implement the set of skills that we have to try to always add value to the building by turning it into something else.
Yeah,
Whether this means we go 4-star. I'm working on a deal right now here in town. It's a 2-story former, a car dealership.
Car dealer.
So
showroom.
Yeah, in a showroom on the second floor. At any rate, we went through most of our due diligence, and we know that we can actually put about 16 apartments up above, and we can turn the entire first floor on to retail.
Right.
And we would be going up 3 stories. We would be building up 3 stories, turning the entire building into a 5-story building. In numbers, it's a $250,000 purchase. It's $1.5 million renovation with almost a $2.75 million FB future value ARV. So, how that deal came to us is very simple. The owner picked up the phone and said, "Hey, you don't know me, I know you, and I know you buy buildings, so would you like to buy it?"
Right. That's
Now, look. When I got to the place, I'm sorry.
No, sir.
When I got to the place, what I was shown was a dirty warehouse. It was literally just this mess.
And he had a worried look on his face, like, oh, somebody. He's shown this building before. He wants to get rid of it, and a lot of people have looked at it. Other developers, other real estate investors have looked at it, and they passed. So we go in there, and he's basically like, well, I looked at this, and I have plans for what I wanted to do, and we're looking at it with our own eyes, and we're going, man, this is gold. But most people are going to go in there and go, I can't do anything with this. And so it's really about vision. It's really about vision. A lot of people are passing up on deals because they don't think they're deals, and they are. That's the bottom line.
Absolutely. Yeah, when people ask me, what are you doing as far as marketing? I try to tell them, I do everything. I think everything's short of maybe newspaper advertising, but the biggest key, and when I see most success, I've said it many times, is doing whatever you're going to do, just make sure you do it consistently.
Yeah.
If you send out one mailing campaign and then you quit, you're not going to get the results. But if you do that consistently each week, each month, then you'll start to see the results. And actually, out of all the leads that come in, the best leads are those that come in through the website, people that have found you. And just like you're saying, and I see that those tend to be the best deals. Mario, you were diving into one of the deals they have. Would you be able to give us, for maybe from start to finish, just from the acquisition period, give us like a timeline or more along the lines of the process? Again, that once, let's just say you have a deal that you're evaluating. Why don't you take us from start to finish?
How much time we have?
Well, give us the brief version of that.
So these are again, we're taking something that's not into something that is. So you're the process it's not as simple as buying again a strip mall and cash flowing it. It's far more. So step one is usually figuring out exactly what you can do, which in itself, it's a huge process. There's multiple variables, multiple factors, so it takes quite a bit to just being able to just compile all this data and paint this picture of what could be. Once you figure out what you can actually do with this piece of land or existing structure, I mean, whatever it is you're dealing with, there's always, meetings with officials just to verify that we're all on the same page. Once you made it past that, let's assume we bought it, let's assume everything worked out, all the numbers fit, let's assume the construction plans are in line, we have purchased the building. Now we begin the process of approvals. And that process in itself could make or break any deal. This is before you actually put a shovel in the ground. I mean, literally an entire year before you put a shovel in the ground. So these are lengthy, costly, high risk type of deals with very, very high rewards, huge rewards. In fact, wealth building rewards, so to speak. So assuming that you have everything right and you have a team of architects and your engineering comes in and everything is fine, you are going to submit this to the city. You're gonna wait for an appointment in front of Board of Adjustments or whatever adjustments you're making. You're gonna go in front of a bunch of people who are going to criticize and try to find everything that's possibly wrong with your building. And that room is usually it's usually filled with, that group of 6-7 people some of them are usually architects, some of them are
engineers.
I mean,
Plainfield has a number of highly qualified and probably, I guess, ex-retired engineers
right.
and architects on the boards. So when you go in there, you better have your stuff together.
Right. So the idea with those meetings really is just being able to being able to not just sell your concept to city officials. Dan is over there. I actually moved it.
Oh,
yeah. Sell the concept to the city officials, but try to basically have an answer for every possible issue you didn't think of. So it's a game of trying to figure out everything that could come up beforehand, and once you're there, having a valid idea or plan for whatever it is brought up. So assuming that you have these things, assuming that you thought of everything, which no one ever does, but assuming that you did, thank you.
Thanks.
Nice. Hey Adam. So assuming that you did everything well, you are gonna get an approval from the city. Once you have these approvals, you are gonna go get bank money. Why wait till then? Simple. A bank doesn't want an idea. A bank wants an approved project ready to be built. So once you have approvals, you go to a bank and you start negotiating that end of this. Again, another assumption. Assuming that everything is right, assuming all the numbers work, you will get financing. And for most people out there who believe getting financing from a bank is an impossibility, it's not. Banks, especially in commercial real estate, banks are very, very fond of them. They want them. They make sense to them. The security behind a commercial building is tremendous for most banks, especially local banks. So a tip, start looking in your own backyard. The same credit union that's 2 streets down from your house will probably finance your commercial project. So that being said, bank money comes in, and now you have your construction loan. Your construction loan is obviously used to build or do whatever it is that you said you were going to build. Assuming that you're really good at that, you build it. Now you have a finished product. Now you go through your releasing period. Now, depending on what you build, I love hearing sometimes when I talk to others about rehab or anything like that. Like, I love hearing the 30-day timeline to rehab something. Like, I did it in 2 weeks, or I did it in 3 weeks. I don't remember the last time. I know they're possible. I'm not saying they're not, but I don't remember the last time I was involved in anything that took 2-3 weeks. Every single project we do.
I can contest to that.
2-3 months.
Absolutely.
So on these commercial projects, it's even. You have 20 people working in any given building. You're going on months. Something like the project that I mentioned before, we're scheduled to complete it in about somewhere around 11 months, assuming that we do it all right. So let's just say a year. So we have an entire year less usually, but we like to structure it on year-long basis. We have an entire year to get to approvals. Once you have approvals, you have an entire year to do the build out. Assuming you did these 2 years and you did it all right, well, now the bank comes in and says you've completed everything. Here's your stabilized loan. And once you have a stabilized loan, well, of course, I skipped leasing.
You got to lease it.
You got to lease the whole thing out.
You want to know it's making money.
Right. They want to
Guaranteed
know.
money the bank wants.
Right. They will not discuss anything unless you have an actual leased out building. Assuming that you have it and your money starting to come in, they'll do your takeout loan, and from that point forward, you will basically pay them what you owe them. You will pay your taxes, you will pay your insurance, whatever other expenses on your building, and the rest will be yours.
In your pocket. Well, Uncle Sam's too, but
oh yeah,
portion in your pocket.
So that's really it. So I mean, as far as timelines, man, if every deal's different, but if I could give you a bare minimum, I mean, a commercial deal will take a year and a half minimum, at the very least. Assuming that you're not necessarily adding 3 levels to something, rooftops, and gyms and all that. So it could get a lot more complicated. Now the benefits. I mean, do we have to go over them? You have $1 million in equity. You're cash flowing $10,000 a month. I mean, it's a whole nother life. You're not chasing the next deal. In fact, your checks are chasing you on a monthly basis.
It's having your money work for you.
Right. So, going through the process, man, going through the troubles and tribulations for 2 years of creating this thing that 2 years ago you simply imagined you could do, taking that idea, that concept into a reality 2 years later, man, you deserve those $10,000 a month. You deserve $1 million in equity. I mean, it's a matter of working for something that you believe in and ultimately reaping the true rewards of hard labor and risk taking.
Absolutely.
So that's it. That's the process.
And it's obviously very rewarding, not just financially, but personally. I mean, I could tell just from you talking about it, Mario, that you're very passionate about it. And
I love this stuff. I was made for this. I've been told I've lived many lives. I believe in the past life I was a real estate developer already, man.
Okay, there you go. I'll tell you one more question for you guys, before we wrap up. But for our listeners that are new to commercial real estate, or they're following a similar path as you guys did, where they're ready for that next step, like they have a sustaining rehab business, they're looking to take that jump. I mean, what do you think the best way for them to get started?
We'll take this. I don't know,
man. Well, keep looking for the deals. Yeah. Like you said, the biggest hiccup that you hear is that there's no deals. Deals. You got to keep looking for them, and you got to look at them with a different eye, or else you're always going to be stuck in that same spot. A lot of people say it's the financing. We don't have the money. How are we going to make it happen? Well, I don't know. You get the
that's
deal.
That's where we're different.
Yeah.
So that's why we actually run separate sides of the company. So like I was saying, Dan runs the actual development end of this, the construction end of it. Whoa.
You're okay.
You're still there, right?
We're still here. We're rolling.
All right. And I run the funding end of what we do. The investor relationships end of what we do, simply because it's 2 portions of any successful real estate company that have to be in place, and have to work together. So as he's telling you, the most important thing for people to do is find a deal. I beg to differ. I say the most important thing you should do is find the money. I mean, deals. There's deals. Find support. Find financial support behind you. I'm not telling you ask for $1 million and try to get it on a deal you don't have. No. I'm simply saying create a concept of where you'd like to be. It's very easy to find renderings. If you have the capital, buy a rendering. I mean, you can find them on the internet, for crying out loud. My point is create something that you can present to people who could be in a position to lend you money, and simply aim to have
line them up
a relationship with someone whom you can pick up the phone and call once you found the deal he's he's talking about.
Right.
So two schools of thought on that, and I think that's probably one of the things that makes us great. It's that, man. It's being able to have multiple views on the same topic, and come into to a great decision based on multiple ideas. So yeah, I'd say find the money first. Create your next step, build it. Not in that sense, just create some type of concept. Work numbers. I mean, if you're trying to get into commercial real estate, understand what numbers actually mean. What's an NOI? What's your cap? How do these things come about? Get confidence behind you, and present your product, and then gain the other half of the confidence you're going to need, which is the financial confidence, which is knowing that someone out there is actually willing to back you financially. The minute you have those two, I believe it's only a matter of time until you execute, you pull the trigger. It's finding the happy medium between those two is what I believe will get anyone ready. Now, all that being said, man, residential real estate, investing is not rocket science, and neither is commercial real estate. It's not. The biggest difference is, of course, the assets themselves, cash flows and all those things, but we just have a lot more formulas to deal with than we did when we flipped houses. I mean, it's not an impossibility. We've learned it. I mean, we were talking about this yesterday. I mean, we all have real estate licenses here at Arkad, but none of us have an MBA. I mean, none of us are lawyers. I mean, so a bunch of the terminology that we're using now on these performas, on these presentations we're doing for investors, have all this new terminology that to us was actually the way it was supposed to be written. We just didn't know the terminology. So we had the concepts, we had all the formulas in place, we just didn't know what to call it.
Big ideas didn't know what they were called.
So it turns out there is financial terms for all these things. Anyways, point is, it's a learning curve that I think anyone can take. I don't think I'm any more special than anyone out there. I simply think I'm capable of executing. I'm capable of chasing a dream and sticking to it more than most people would. I think that's probably one of the biggest differences.
Well, you take action, and that's really what separates the dreamers from those that actually do it. Guys, I really want to thank you for being on.
What I like to say is we're not afraid to skin our knees, and a lot of people are afraid to do that.
Sure. Guys, this was very detailed and informative. I really appreciate you being on. Before we sign off, why don't you just tell some of our listeners, how they can get in touch with you, if you guys have any programs available, whether it's for how other people can invest with you, whether you have maybe some other internships available for those that are looking to get started, anything you guys want to let our listeners know how they can contact you for networking or whatever purposes.
I mean, look, we're a small, true real estate investing and development corporation. We don't have books. We don't sell seminars. We don't do any of that stuff. I mean, we're friends with a lot of these guys that do, and we do we're invited to these things every once in a while. But we're not in the business of selling knowledge per se. Nothing against it. We're just simply not our focus. I mean, we have other things to focus on. But that being said, we don't necessarily look to sell you anything. What we look for is true partnerships. We look for people who want to share this ride with us at a smaller scale. We're not necessarily looking for somebody to own half a building with us, but somebody who's looking to diversify, someone who's looking to place their money in something that is going to grow along with a good, clean, straightforward partnership between two people, or three for that matter. So we're always looking for investors. We're always raising capital. I mean, we manage millions right now, but where we're going or where we're trying to go, it's we're gonna need far more capital than what we have available. So we're always looking for capital. Now that we're doing commercial deals, it's a much more appetizing product for higher net worth investors. So we're certainly open to doing those with investors. I mean, houses, it's a given. We've been raising capital for house flipping for the longest time, and that's always available. We pretty much always have a residential pipeline. Our website is, here, let me get something. Can they see?
Boom.
There we go.
Arkadgroup.co. Not com. Co.
CO for company.
Okay, so for our listeners, that's Arkad Group. That's ARKADGROUP.co.
Correct.
The address under it is actually here where we are, our first building. So would love to, if any of your listeners wanna meet us, wanna set something up, just go on the website. My email is there. It's mario@arkadgroup.co.
Or Daniel@arkadgroup.co.
Hit us up and let's see if
We'll set it up.
we can make magic happen.
Excellent. Thanks a lot, guys. I appreciate it. I look forward to having you both on again.
Awesome, man.
Appreciate
Best of
it,
luck
man.
with everything.
Thanks
Thank
a
you.
lot.